Are rising prices stretching your budget thin? Wondering how to safeguard your finances against soaring inflation? Stay tuned as we delve into effective strategies to combat elevated inflation rates, tailored for individuals in the United States and the United Kingdom. Welcome to Economic Insider, your trusted source for in-depth financial insights. Today, we're addressing a pressing concern: elevated inflation rates. Understanding how to navigate this economic challenge is crucial for maintaining your financial health. Inflation refers to the general increase in prices over time, diminishing the purchasing power of your money. While moderate inflation is typical in a growing economy, elevated inflation can erode savings and strain household budgets. As of early 2025, both the US and the UK are experiencing significant inflationary pressures. Factors contributing to this include supply chain disruptions, increased consumer demand, and geopolitical tensions affecting energy prices. Central banks, such as the Federal Reserve and the Bank of England, are closely monitoring these developments. One of the first steps to combat inflation is reviewing your budget. Take a close look at your spending habits. Identify non-essential expenses that can be reduced or eliminated. It's time to prioritize needs over wants. Essentials like housing, food, and healthcare should take precedence, while discretionary spending should be carefully managed. Small changes in daily habits, like cutting unnecessary subscriptions or choosing cost-effective alternatives, can make a significant difference over time. Investing in inflation-protected securities is another smart move. In the US, Treasury inflation-protected securities, also known as TIPS, are government bonds designed to keep pace with inflation. Their principal value increases as inflation rises, helping to preserve purchasing power. In the UK, index-linked gilts offer similar benefits, adjusting payouts based on inflation rates. These financial instruments can serve as a solid foundation for an inflation-resistant investment portfolio. Diversifying investments is key to safeguarding your wealth. Traditional stocks and bonds may be affected by inflation, but certain assets tend to perform well during high inflation periods. Commodities like gold, silver, and oil have historically served as hedges against inflation, maintaining or even increasing their value when currencies weaken. Real estate can also be a valuable investment, as property values and rental incomes often rise with inflation. If you're considering real estate investment, focus on properties in high-demand areas with strong growth potential. Building a robust savings strategy is essential in uncertain economic times. With interest rates fluctuating, it's important to place your money where it can work for you. High-yield savings accounts and certificates of deposit offer better returns than traditional savings accounts. Making regular contributions to savings accounts and emergency funds can help ensure financial security in the face of rising costs. Managing debt wisely is another crucial component of combating inflation. If you have loans or mortgages, consider shifting to fixed-rate options. Fixed-rate loans lock in your current interest rate, protecting you from potential future increases. Paying down high-interest debt, such as credit card balances, should be a priority. The faster you reduce outstanding debt, the less interest you'll pay in the long run, freeing up more money for essential expenses. Boosting your income can also help offset inflation's impact. With the job market evolving, now is a great time to invest in skill development. Enhancing your qualifications can open doors to higher-paying opportunities. Exploring side hustles, freelancing, or investing in passive income streams can provide additional financial stability. The gig economy offers various ways to supplement your earnings, from remote work to consulting services. Staying informed is one of the best ways to prepare for economic fluctuations. Keep a close eye on inflation trends, economic policies, and interest rate changes. Follow financial news, government updates, and market trends to help you make better financial decisions. Consulting with a financial advisor can also provide personalized strategies tailored to your unique situation. Elevated inflation poses challenges, but with proactive planning and informed decision-making, you can protect and even enhance your financial well-being. The key is to remain vigilant, adapt to changing economic conditions, and make smart financial choices that secure your future. Thank you for watching. If you found this information valuable, please like, subscribe, and share with others who may benefit. Stay tuned to Economic Insider for more insights to help you thrive financially.